All right, welcome back from that report. Once again, the CBN's Monetary Policy Committee has opted for stability and maintaining the monetary policy rate at 27.5%, the cash reserve ratio at 45% for commercial banks and 14% for merchant banks, and the liquidity ratio at 30%. Now, joining us now is Edidiong Ikpoto, a research analyst and financial journalist who has been closely tracking policy trends and their macroeconomic implications. Thanks for joining us, Edidiong.
Thank you for having me, Justin.
All right, let's begin with the big headline, really. What's your initial reaction to the MPC's decision to retain the MPR at 27.5%?
Well, I would say I expected it, but I was hoping that they would reduce it. I was hoping that they would lower it. But then again, given what we know, I mean, historically, in the past 4 years, the way the MPC have moved, it was more likely that they were going to hold it at 7.5%, which is exactly what happened.
All right, now, but inflation continues to rise, currently above 33%. But what tools does the CBN really have at this point, and are they effective?
Well, I think for them, like I said, I expected that they would hold it. And this is because of the inflation figures that came out less than a week ago, thereabouts, when the NBS told us that inflation slowed down from 24.23 to about 23.71 and thereabouts. So the moment inflation figures came out, of course, the general expectation, not just my expectation, but a lot of people out there, a lot of observers out there, was that the NPR was going to remain at 27.5. But like I said, I really was hoping that they would lower it, because it's generally not good for the economy for the NPR to be higher than the inflation rate, which again begs the question, do we even know what the inflation rate is to begin with? And not like you said, what are the tools that the CBN can use to combat inflation? It cannot always be about the NPR. I mean, I get so sick of even coming on here to talk about this all the time, because we've seen them do this in the past 4 years. This morning I was just thinking about of how did we get here? Because I still remember like yesterday when the NPR was 11.5%. And this is early 2022 we are talking about here. The inflation rate was a little above 15%, I think 15.6 or thereabout. So you see here that the NPR was below the inflation rate, because the CBN have traditionally always said it is not good for the inflation rate and the NPR to be too far apart. So we saw in this instance that the NPR was below the inflation rate. But again, we saw when the NPR was moving at a sprinter's pace, because inflation was going up rapidly too. So I think, of course, what is creating this discrepancy now is because they had to go back to recalculate the inflation rate, which I strongly disagree with, because if you look at the way the ONS, the Office of National Statistics, which is the body that calculates or is responsible for reporting inflation in the UK, there is comprehensive data on how this information is processed. So most of the time, the MBS comes with all kinds of information, and you really doubt the veracity of it, because the process of arriving at whatever figure they're telling us, you really cannot tell. So but we've seen that it's not working. And I've said it before, always relying on the NPR to control inflation never worked. It hasn't worked in the past 4 years, so I'm not sure if it will work within the Nigerian context.
All right, let us move on quickly now. With high borrowing costs, what's the likely impact on small businesses and the real sector?
Well, the impact is clear. It's obvious. So we'll see reduced activity for the SMEs. I mean, even the businesses in the formal sector who cannot even borrow at the current cost. So never mind the SMEs. So we're looking at more and more small businesses going under. I mean, they're going under by the day. We've seen the data. 4 years ago, we had about 41 million of them. Today, they are hovering somewhere within the neighborhood of 34 million SMEs. So we've seen maybe within 7 to 8 million SMEs close shop, and they are closing shop by the day. I mean, I think it was sometime last year I was speaking with somebody within that space. There's National Association of Small-Scale Industrialists, the Lagos State branch, and he was relaying a whole lot of challenges that the sector is going through, and how it's so difficult, to get word to the guys upstairs about what, really they should be doing to help small and medium-scale businesses. So the simple fact is that they cannot borrow at this rate, Justin.
All right.
You cannot borrow at these rates and stay profitable. So it's just something that is there in black and white.
Okay.
And ultimately, I understand why the CBN is doing this. They're saying, okay, inflation reduced a little bit, but it's time for us to just observe. Let us not take action.
All right. Okay. Now, some people
they can't increase without having to take, action. So let's just keep it at what it is and continue to observe. But given that the NBS is now telling us inflation rate is at 23%, I expect that they should start moderating backwards to, kind of agree with the current inflation figure.
So is it like the CBN is prioritizing price stability over growth? And if it's that, is it a fair assessment?
Yeah, I think the sentiment of price stability comes also with, part of the decision that has informed maintaining the NPR at 27.5%. And this ties directly to what they call exchange rate stability. So I wouldn't call going from 400 or thereabout to within 2 years stability. That doesn't indicate stability to me. But because it has stayed somewhere within the neighborhood of 1,600 for a while now, so the CBN is beginning to think, okay, this thing, it seems that the curve is beginning to flatten. We are not seeing that kind of rapid depreciation of the naira that we saw a year ago or thereabouts. So maybe it's just time for us to agree that there's a little bit of stability in the market, even though the average Nigerian shopper will not agree with you. And I think that when we're talking about price stability, when we're talking about inflation, it's just what the average Nigerian shopper has to say that goes way more than what the statistic body says. So yeah, maybe a little bit of price stability, but there's a difference between saying the prices are stable but still relatively high. When you look at the cost of living and the standard of living. I was taking a look at the inflation figures for the UK earlier today, and it says that doing somewhere within the neighborhood of 2.8% or thereabout. The same UK, which about 18 months ago were doing double digits. This was maybe 10% or 11%, and there was already a cost of living crisis that was saturating the media. So I thought to myself, how can you call inflation rate of 10% cost of living crisis? So we are doing 23%, which is far higher when you really, sit down and calculate based on the reality. Unfortunately, I wouldn't refer to the fact that the Naira has not depreciated as rapidly as it did in the past maybe 9 months or a year ago. That doesn't mean price stability, because I was always afraid that this was what was going to happen. When these policies begin to come together and even yield the intended impact, that we will still see, the income of the average Nigerian and what the price levels are. There is still that, wide disparity that is there.
All right.
Assuming that the minimum wage of 70,000 or thereabouts still goes through, it is still significantly, at crossroads with the current price levels. So, because we are seeing a lot of people try to pass this as a win. It's not a win. So it's a lot of work still needs to be done in terms of either beating down prices or dramatically increasing the income level of the average Nigerian, however that is going to happen.
All right, Edidiong, so what are the implications now of holding the CRR at 45% and the liquidity ratio at 30%? Are banks now being squeezed, as it were?
Yeah, it seems fair enough for me, even though it takes me to an important point that I've been thinking about since this was announced yesterday. That it seems there's more emphasis to ensure healthy banks than, because there's a difference between making sure that you have a healthy banking system and also making sure that the banking system serves the formal sector, that is supposed to serve. So, cash reserve ratio of 45-50% for me is still relatively high, and you would need to have super healthy banks to be able to maintain a cash reserve ratio of 50% and liquidity ratio of 30%. We see what the CBN has been trying to do ever since Cardoso came in with the recapitalization. So everything, they've done points to the fact that they want to have a very strong and robust banking industry, which is working. Look at yesterday, Stanley reported profit of about 200 billion plus in the first quarter. The figures we've seen, the dramatic increase in. Even with some of them run into trouble recently, have reported very healthy profits in the past year or thereabouts. So, of course, this is what informs the CBN to say, okay, why not up, the cash reserve ratio, which is good for the industry, basically. Okay. But when you look at the people, the businesses that the industry is supposed to serve, not so much.
Okay, now fine, but let's project for the Q3, as it were. Do you see room for any loosening of monetary policy before the end of the third quarter of this year? Then, how would you assess the CBN's communication strategy under this administration? Are they doing enough to guide market sentiment? Let's just take that double-barreled question as we begin to round off.
Yeah, can you repeat the question, Justin?
Okay, the question I asked, I was asking what if you see this trajectory continuing in the third quarter of this year, and if CBN has been communicating well enough with all stakeholders.
Yeah, I think ever since, nothing has really changed much, if you ask me, with what we have under Emefiele and Cardoso, in terms of communicating with stakeholders. Unless you have platforms like the NPR, which yesterday, you hardly really see the CBN come out to address stakeholders, and most of the time it's always, at a point of crisis, like we saw what happened with the manufacturers and the forex forwards that was, it became quite, a mess at some point. And you see the organized private sector trying to put together, delegation, trying to see how they can get an audience with the hierarchy of the Apex Bank, which is not supposed to be. I've always said that there's an antithesis between what the CBN says it's trying to do, or what the government really says it's trying to do for the industrial sector, and what it is actually doing. So when you come out and see the NPR is 27.5%, exactly how that's supposed to boost industrialization. So there's a whole lot of talk from the CBN about trying to boost industry, trying to boost production. But when you look at the numbers, when you look at the figures, they just didn't add up. And of course, this latest development with the NPR just goes to cement that. So nobody really can tell for now how inflation is going to move in the next 3 to 6 months.
Okay.
But whatever happens, because I know we're having another MPC in July, whatever happens, my recommendation would be for the CBN to, in that next MPC, see how they can try to level they can't apparently, because that would be a dramatic reduction. But at least kickstart the process of trying to see how they can match the NPR and the current inflation rate.
Okay, my last question for you would be, as we round up because of time now, with parallel market volatility and rising FX pressures, how does monetary policy interact with exchange rate stability?
Well, given yesterday's development, I think we can tell that there is a strong relationship there, because in the past few months we have seen foreign reserves increase a little bit by about 2% or thereabouts, from $37 billion or thereabouts to $38 billion, something within that neighborhood, which again was, you would say, a contributory factor to why the CBN decided to hold the NPR 27.5% yesterday. So there's increasing sentiments that with increasing foreign reserves, that increase of about 2.5% gives us import cover of about 7 to 6 months. So yeah, there's that sentiment that since, but also there's the cost of worry because of the lowering of prices that we've seen. So all prices are beginning to come down, which of course for a country like Nigeria is a cause for concern. But ultimately, when you look at the big picture, with the increasing forex reserves and a little bit of stability we've had in the forex market, there's that improving sentiments that the NPC can afford to hold the rates. And I think for them, even though this is something that is done out of observation, I think for them there's also a sense of doing this, increasing it, which is what we've seen happen so many times in the past 4 years, that there's some type of incentive.
We have to go now. All right.
This is supposed to cause in the economy.
All right, thank you so much, Edidiong Ikpoto, for your sharp insight and context. We do appreciate them.
Thank you for having me, Justin.
All right, so clearly navigating Nigeria's economic terrain requires more than just numbers. It demands bold ideas and policy consistency. That's all we have for today on Business Insights. Join us next time as we decode the stories shaping Africa's financial future. I am Justin Akadonye. Thank you for watching and keep investing in knowledge. Bye for now.